Welcome to Hacking the Hustle. This is your host, Benjamin Sklar, and I am very excited for this special episode today with Brian Burke. What's up, Brian?
Hey, Benjamin, how's it going?
I'm doing well. A little
Good.
background on Brian for those of you listening. Brian is the president and CEO of Praxis Capital, which is a real estate private equity firm based outside San Francisco. He manages syndications for single family, multifamily across the US. And since 1989, he has acquired over 750 properties, including 3,000 multifamily units, and has arranged over $500 million in equity and debt for his company. And he's a frequent public speaker and big time star on Bigger Pockets. So I am honored to have him on my podcast. So what's up, Brian?
Hey, man, it's great to be here. Thanks for inviting me on.
Of course. I'd like to just kick it off with your background and what's the first memory you have that inspired you to get into real estate?
Man, it's funny. When I was probably about 18 years old, I was trying to figure out, how do you like break out of the hamster wheel that everybody in society is locked into and make money through a business or some kind of a thing, out on my own. And so I had this idea that a friend of mine actually came up with, where you sell books and you never have to buy the books. You just drop ship them. So you address a bunch of envelopes and you send them out to people, and then they order the book, and then you just forward the order to the drop shipper, and then they send the book out. Well, I got a free sample of all the different books, and they were terrible books, by the way. And I got a free sample, and one of the books was on investing in real estate. And I read it and I thought, wow, this is actually kind of interesting. And, it was probably the worst real estate book ever written, but I thought, hey, this is kind of interesting how you can invest in real estate and make money. I got to figure out how to do that.
Mm-hmm.
So the rest is history, man. I've been doing it ever since.
That's incredible. How long have you been doing it?
31 years.
Wow. That's
Yeah.
incredible.
Yeah. It's a long time.
What was your first deal?
My first deal was a single family house rental.
Mm-hmm.
I didn't even own my own home yet. And I bought this place with $0 out of my, I had no money. So I had $0. I had no money. And I had good credit. I was only 21 years old, but I had good credit. And I got the finance company to finance 90, 80 or something percent of the purchase price. But I got the seller, this is the important part, I got the seller to carry back the down payment. So I literally was able to buy this for no money down. And I didn't have a choice. It was the only way I could have done it. And that was my first real estate investment.
That's epic. Seller financing. That's awesome.
Yeah. I didn't know it was that hard to get. I was 21. I didn't know any better. I didn't know it was hard. I just thought, oh, you ask people and they'll do it. Yeah, not quite that easy.
Yeah. Awesome. So what are you working on now? Tell us about what's on your to-do list these days.
Well, geez, last year we bought 1,000 units.
Wow.
This year, I thought we were going to sell 1,000 units and buy 2,000 units, but the world had different plans. The pandemic came along and shut down almost all of the economy, and as a result, we might not sell anything, and we might not buy anything this year. Maybe this year is just a year of asset management, and all we do is just make sure we maximize the performance of everything that's on our books, which we're going to do anyway. But we may not be distracted at all by looking for more assets to acquire. So we'll see. We're also we got a lot of strategies here. Fortunately, we have a home building fund where we're building houses. So we've got some of that in conjunction with a builder partner. We have a lending company through our lending partner, and we're doing some distressed debt opportunities and some other debt opportunities. So we've definitely got a lot going on to take advantage of essentially every angle that we have in the real estate world, for sure.
That's fascinating. What's something that you're interested in right now? What's something that you're curious about that you're spending time on Googling?
Well, really the thing that we're the most curious about is this distressed debt opportunity. And, there's a lot of lenders out there that were making loans to real estate investors over the last couple of years, and those lenders are finding themselves in a bit of distress, not because the borrowers aren't paying, but because the loans are on their books, and they had a warehouse line, for example, that lent them money to turn around and lend to others, and there's money coming due on a lot of those warehouse lines, and the lenders don't have the cash to meet those margin calls. So they're going to have to sell off loans. So that's what I'm most curious about right now, is to see if we can capture some of that opportunity from those lenders that are having trouble.
Interesting. So you're interested in buying notes?
Yeah, buying the debt, from those lenders, and then we turn around and we service those loans, and perform workouts with borrowers, or foreclose if we have to, and whatever it is that we need to do to work our way through the portfolio. But for us, it's really just about we're not really a real estate business. We're really a financial services business. Our job here is to provide investments for high net worth individuals and family offices that are looking for passive income. And so that can come from a variety of different things. Now, all of the different passive income opportunities that we offer all relate to real estate in some way. Either we're loaning on real estate, we're buying real estate, buying, fixing up and reselling, house flips, or long-term holds, apartment complexes. The majority of our business is certainly in the multifamily space, but we have a variety of different strategies to make sure we capture all the opportunity we can for our clients.
Mm-hmm. What inspired you to start these different divisions under your belt? The lending branch, the fund for building homes. I'm sure at the beginning you were just a guy trying to figure it out. How did you get to the point where now you have different departments that are lending money?
Yeah, that's a fair question. And, I've always had kind of what you'd call different departments. It's when I first started, I was just flipping homes, buying, fixing up and reselling houses. That was all I did for probably the first, 10 or 15 years that I was in this business. And then, then I expanded on that strategy and started buying and holding single family homes. So I had rentals, and then, we had flips. So now we kind of had two different divisions, and then we expanded into additional counties. So we had, different divisions in different areas, and then we expanded into different states. So then we had different divisions in multiple states. And then, we got into commercial real estate, and really it was about, where is the opportunity right now? And, I like to say that real estate is kind of like a stream that wanders through a meadow. The stream in a flat meadow doesn't go in a straight line. The stream curves right to left as it winds its way through a meadow. And all we're doing is we're rowing our boat down the middle of this stream. And if we row in a straight line, we're going to run aground. We have to be prepared to row to the left and row to the right as the stream we're in shifts course. So we've always done that. We've always, been able to pivot to make sure that we can find the opportunity and take the most advantage of that opportunity. Most recently, the two most recent additions to our platform is the lending and the home building, and these came to us opportunistically. The home building came to us because the city that our office is based in suffered from a massive wildfire that ripped through Northern California and burned down 5,000 homes within 2 miles of our office. And in fact, the fire burned all the way within a couple feet of our office. And, that presented an opportunity to rebuild the community by, building homes on those lots where homes had burned down in the fire. And it just so happened the builder who built a lot of the homes to begin with came to us and said, hey, we want to rebuild homes on these lots. And, would you guys be willing to partner with us? And of course we said, sure. And did it. And then like the lending thing, again, another situation where somebody said, hey, there's this opportunity for us to do this. We're experts in the space. Would you partner with us? And we did.
Fascinating. If you could go back to the first 10, 15 years when you were flipping houses, do you wish you could have been lending as well and had different departments when you were an amateur?
It's always easy to look back and say, I wish I would have had everything then that I have now, because that means by now I'd probably be retired. But it doesn't work that way. It's like your businesses, in my world, our business grows organically. And, we don't add a strategy until we've mastered the first one and we're ready to add on and have capacity, have experts in that field that are part of the team. We have to have all of those things. And, back when I was first getting started, I didn't have those things. And the other thing that, and the one thing that we have the most of here is capital. We have a great base of investors. And the reason people come to me that are experts in the field with great strategies is because they know that we can execute and we can raise money for those strategies if we come on board. So, opportunity brings opportunity, I guess.
Mm-hmm. I saw that you wrote an article on Bigger Pockets about the importance of constantly nurturing relationships with investors. And I'm assuming you remember writing that. And I recently started a company, a online platform where real estate syndicators can generate referrals with investors by hiring freelancers to attend networking events on their behalf. And I was really curious to hear your thoughts on that concept. Could you see real estate syndicators across the U.S. who are constantly in need of more funding, leveraging freelancers, independent contractors, to attend real estate meetups on their behalf to network and bring in these relationships?
Yeah, it's an interesting concept because, for somebody who's just getting started, networking is enormously important, right? And getting your name out there is enormously important. So anything you can do to expand your sphere of influence is probably a good thing and something to look into. When you reach a certain level, where we're at, it probably wouldn't do us a ton of good because, people come to us because of our name or, because of something that I said personally at a conference and that sort of thing. You can never quite replace yourself. Mm-hmm. So, for me, we have a tremendous network that comes to us through word of mouth and referrals. And they do that because they have a trust level in us personally and in that personal connection. And it's very important that investors have a high level of trust. Now, when you're first getting started, obviously it's difficult to have that trust, right? You don't have a track record and all that kind of stuff. So the only thing you can do is surround and drown, right? It's like the shotgun approach versus the rifle approach. Ours is very much rifle. But in the beginning, the shotgun approach is, the more people you can get in front of, the more chance you have of getting a deal done. And, if you only need to raise a small amount of money, you can do it if you have a big enough audience. Mm-hmm. For us, we're raising a large amount of money. So what we want a high quality audience that we know is going to write big checks repeatedly over and over and over again. And, that only comes to you in time, but it all has to start somewhere. And, and networking and getting out there is really how it starts.
Mm-hmm. I agree with you. So I feel like a lot of investors, if they were interviewing you right now, they would want to know, what proprietary information do you have? Based off of all the properties you have, what are the insights that you can share? So I'm going to ask on their behalf, what can you share that you feel like other people would want to know who are also in your space?
Well, the proprietary information that we have it comes from two things, really. Maybe three. One is we have our own proprietary tools. In other words, we have underwriting models and spreadsheets and workbooks and things that are very, very sophisticated that we developed here internally. In fact, most of it is stuff I personally wrote. And those tools give us a tremendous advantage when we're analyzing opportunities. Because it's enormously thorough and enormously precise. When I first started in this business, if I compare the tools I was using then to what I'm using now, it's kind of like the difference between, using the back of a napkin and a crayon, versus using a laptop. That's the difference in sophistication. The other proprietary thing that we have is relationships. And, real estate is all about relationships. And the third thing I was going to say, I guess really is kind of the same as this one. Those relationships come from two different angles. One is relationships with investors so that we can get deals funded, and we're constantly adding to those relationships and meeting new people and bringing new investors in. But the other is relationships with brokers and sellers and, the gatekeepers in the industry that have the opportunities for us to invest in. So that might be large apartment owners that might be thinking of selling. It might be large multifamily brokers in a variety of cities where we operate that bring us deals to buy that they haven't shown to anyone else. And, those are really the big proprietary advantages, is access to deal flow and the ability to analyze it. And then, coupled with the ability to get it funded. That's the secret sauce.
Nice. Makes sense. So I want to talk about real estate syndication. I feel like the majority of my audience doesn't know what that is. And the word syndication is kind of doesn't paint the picture of what really you're doing. So could you give, from a high level, what is real estate syndication, and what's the one thing you wish you had known when you began this career in real estate syndication? And what advice would you give someone who wants to pursue a career in real estate syndication?
So real estate syndication is, if you think of mutual funds versus investing in individual stocks, that would be similar to thinking of buying an individual property versus investing in a syndication. So, instead of buying one stock, you might invest money into a mutual fund that's managed by someone who picks all the stocks. They buy, they sell, they buy, they sell. They figure out what to buy and what to sell and when to buy it and when to sell it, right? And then they distribute money through dividends to the investors on a periodic basis. That's how a mutual fund really, essentially works. So real estate syndication is like a mutual fund for real estate. There's a fund manager who finds the real estate through their sources, proprietary sources of deal flow. They underwrite the opportunity, and then they assemble a group of investors to provide the funds to acquire that real estate. That's what a syndication is. It's really nothing more complicated than that. And then there's two different ways to think about syndication when we talk about it in the context of this discussion, and the way you're thinking about it goes two different directions depending upon which way you're coming from. If you're thinking about, how do I invest in a syndication? How do I be the one that takes my hard-earned capital and invests it in this fund for someone else to manage? That's one side of the conversation. And the other side of the conversation is, I'm a real estate investor and I want to grow my business and I want to raise money from other people to help grow this business. And you're the syndicator. So, there's two completely different things, and there's different skill sets for each of those two.
Mm-hmm. And so do you feel like real estate syndication is at risk from all these platforms like Fundrise that are taking over the industry?
So crowdfunding is an interesting new thing that's come up where, due to changes in the law, it now allows fund sponsors to raise money and advertise for the money that they're raising. And that allowed online portals to come as a new cottage industry where, someone like me, I've got a fund that I'm going to launch, and then I could take that out to our group of investors, for example, and raise money. Or I could go to a crowdfunding portal and say, here's my offering, put it up on your portal, and then it appears on their website and people could invest through the portal. That's the kind of the way the industry got started. What they found was it was difficult and kind of clunky for that to work, because it is such a relationship driven business that a lot of people don't feel comfortable pointing and clicking and wiring $100,000. Mm-hmm. Instead, they would much rather know the sponsor that they're investing with and get a little bit more intimate with the real estate that they're going to be investing in and that sort of thing. So the crowdfunding portals didn't quite take off the way they had wanted, and there's been a lot of failures in that industry as a result. So there's certainly some good offerings that you can find out there, but there's also some bad ones. You just have to be really careful.
Interesting. What's a common myth about real estate syndication that you would like to debunk?
The most common myth is that it's a easy road to wealth. People will think like, oh, I have an idea. I'm going to become a real estate syndicator. I'm going to raise millions of dollars from people I don't even know and go buy a bunch of real estate and make millions of dollars for myself. And I'm going to do it really quickly. If that's your expectation, you're going to be enormously disappointed.
Yeah. I have a question that personally I'm curious to learn about is how do you contact and maintain relationships with investors? Because I feel like a lot of people spam investors, me included, with emails, and there's no tact to it. And I feel like you've hacked this important skill. So could you share with us some insights and tips you have in how to nurture relationships with people who are interested in investing in real estate?
Well, yeah, interesting question and great points. First of all, I don't spam them. We don't ask them for anything. We don't even communicate with them very often until they're in an investment. When they're in an investment, obviously they get regular communication about what's going on. But when they're on our list waiting for an opportunity, we'll let them know when we have one. It would be easy to say, well, a lot of those people will be gone by then because, they didn't hear from you. They thought maybe you fell off the radar or something. And so they moved on, and, maybe we lose some that way. But we also have a lot of people, I've actually had an investor come to me one time and they said, the reason I wanted to come in and meet with you, they actually came to our office to meet with us, which is actually rare, but they did because she says, what I like about you guys is you don't spam us with a bunch of salesy emails. You'll tell us when there's a deal available, and otherwise you leave us alone and you let us do what we, go about our day, and that really is kind of the way we operate. Every once in a while, we'll send out some kind of information, about something, or let people know something that's important that's going on in the macro world, that we think is of interest to them. We post articles on our blog. I post articles on the BP blog, or I answer questions in the forum and kind of stay visible that way. But, we don't send you, an email every other day just to remind you, hey, we're looking for real estate. It's just too much.
Yeah. Good points. What do you think is the difference between you and the other successful real estate investment companies and the thousands of others that are filled with smart, ambitious people, but they're just not clicking? What do you think they're missing? What's blocking companies from achieving the success that you've achieved?
Well, there could be a lot of things. One of the things that happens is sometimes people aim a little bit too high. And it's good to aim high, but if you're aiming high, at least, play low at the same time. So, somebody might say, I'm going to go out and go do a $10 million deal as my first deal. And they go out and I got to raise $5 million to buy this $10 million deal. And they find that they can't. So they fail or they give up, when really if they would have said, I'm going to go out and buy a $500,000 deal and I need to raise $200,000 to get this deal done. I'm going to go see if I can do it. They might have had success. And then if they did, then the next one they could go and be like, I'm going to go buy this $700,000 deal and I got to raise $300,000 to do it. And then the next one I'm going to buy $1 million deal and I got to raise $500,000, and so on and so on. And you just organically grow. A lot of times people try to bypass that step, and most people that I know of, you don't stand on the ground and jump on the roof. Instead, you get on a ladder and you go one by one up the rungs of the ladder until you get on the roof. And that's really the way this needs to be done. And some people, they want to take a shortcut. It just doesn't work though.
I love that analogy. I feel like I'm at the first rung. So what advice do you have for me? If I want to be 31 years from now in your shoes with an investment company, with a portfolio, you could go back and talk to your young self, what would you tell Brian?
I would say to do the same thing I did. So you're standing on the bottom rung of the ladder, take your right foot, pull it off the rung and raise it up about 12 or 13 inches and set it on the next one and then pull yourself up. And then do that with your left foot and then again with your right foot and just keep doing it, because that's really what it is. I mean, that's how I did it. I bought that one rental house, and then, then I bought a flip, and then I did another flip, and then I did, another rental, and then I did a series of flips, and, and it was all one at a time. And, my first house was like, I don't know, 100,000 or something like that. And then, it's just small steps in repetition until finally you get to a point where you've reached a critical mass. I mean, it took me a decade to get to the point where I could easily raise money by just, going out and making a few phone calls.
Yeah. Amazing. All right. So before I wrap it up, I want to talk about your book. Tell us about your new book. It's called The Hands-Off Investor, An Insider's Guide to Investing in Passive Real Estate Syndications. Can you tell us what are the great things we can learn from your book?
Yeah, earlier you asked me, about getting into syndication. Mm-hmm. And, I told you about, one of the questions about getting into syndication is if I'm a passive investor and I want to make an investment into a syndication, how do I do that? How do I find a syndication to invest in? How do I make sure that I'm investing with the right company? How do I know I can trust them? How do I know they're going to do this right? Mm-hmm. And then once they show me the right, an offering to invest in, how do I know if that's going to work? How do I do it? Does it fit my goals? How do I understand the real estate and know whether or not the sponsor that's showing me this offering is being reasonable in their assumptions? Most people don't know the answer to any of those questions. And my goal was to solve that. And, I looked around and I noticed that nobody's written a book. Everybody's written books on how to raise money, how to invest with other people's money, right? Mm-hmm. But nobody's written a book for the other people, the ones that are bringing the money, to say, this is how you do it. And these are the things you look for. And this is how you do it right. And I wanted to solve that by writing this book. So I had a friend of mine that invested her entire life savings into a real estate syndication, only to find out later that the fund manager was a crook and stole all the money, and literally she lost her entire life savings. Wow. And I thought, if I could just prevent that from happening to one person, I will have done some good in the world. So that's what prompted me to write this book.
Wow, that's a sad story, but that's really interesting that you wrote it from that angle. I've never heard of a book targeting the people with the money. So what's another book? What are books that you recommend, and some thought leaders that you would recommend people who are listening, who are interested in investing in real estate?
Well, there's a lot of great books on investing in real estate. If you go to biggerpockets.com and find several books related to all different kinds of real estate investing, there's a lot of really good books on that website. There's a couple books that aren't on that website that are also really good. If you are thinking about being a real estate syndicator, there's a book written by Gene Trowbridge called It's a Whole New Business. And that book is really good for teaching a little bit about deal structure and offering documents and that kind of stuff, which is really, really interesting. And then let's see, on the kind of like on the business management side, there's one that I really liked. It was called Upside. And it was a book on demographics, and it was all about studying the movement of populations and how that relates to, economic forces in real estate, and understanding, why it's so important to be investing in markets that are growing and not markets that are shrinking, and how to be able to tell the difference between the two. So that's another really good one.
Amazing. I'm definitely going to read that first one you recommended. So where can people connect with you online?
Yeah, best way to connect with me is, through biggerpockets.com is a great place. I'm always on there, participating in their online forums, answering questions about real estate investing, and writing blogs on the blog and so forth. And there's also our company website, which is praxcap.com. It's praxcap.com.
Very cool. And then my last question, which is the first time I asked this question, which I want to make it my signature question, is if you could change one thing about the world, what would it be?
Oh my gosh, you got the hardest signature question of anybody. Oh man, and it's the first time you've asked this, so that means I have to give an epic answer.
Yeah.
So that because now everybody else that ever answers this is probably going to heard my answer, and they're going to have something way better. Oh man, if I could change one thing, what would it be? Well, geez, right now, what I'd change is I'd love to have a vaccine for COVID-19, so we could get the world kind of back, get the world back out of fear. There's a lot of fear in the world right now. I'd like to see that go away. And you know what I'd also like to see is I'd like to see a lot of honesty in the real estate investment industry, and have people just be completely transparent and open and honest with their investors and with their partners and with buyers and sellers and all those things, because there's a lot of deception in this business, and it sure is nice to operate without any of that.
Really interesting. I want to ask you questions about that, but we'll cut it off there. Thank you so much, Brian. It was such an honor to have you on my podcast. I know that the people that I look up to you, so it's a big deal to have you on the podcast.
That's cool. Thanks for inviting me.
Yeah,
I appreciate it.
of course.